I will be taking stock market operation series. In this series, we have 8 units. The first unit talks about 3 aspects. The first, why to learn and invest in securities market. Second, basics of securities market. And third, career opportunities in stock market. Moving forward, why to learn and invest in the securities market? Well, when an investor makes the right and correct decisions, there are higher chances of booking profits from those investments, and stock market is truly unpredictable. Investing in stocks has several benefits. The first and most important benefit is that the transactions are smooth and continuous. When investor buys a particular company's stock, it essentially means that that person has got ownership in that specific company. Alright, and this will give the investors a feeling of ownership after purchasing a stock. Having ownership means that the person becomes a shareholder of that important company, and he also takes part in the decision making process. Alright, and owning a particular stock will be a way to express their loyalty towards the company and the business success as a whole. The second benefit is the diversification. Obviously, investors' hard-earned money should go into multiple types of investments for diversification. Holding stocks for a longer period will help an investor to forecast losses to other investment products. Right. The third benefit is the dividend benefits. A dividend is the reward which company gives to the investors for their loyalty. It is an additional income of the company for investors that is paid yearly by every company. No matter if the stock has lost its value or representing profit coming from the stock, the dividend payments will definitely arrive. Dividend income can help an investor to fund a retirement or pay for another investment to grow their portfolio over time. Next benefit is investment gains. This is one of the major benefits of investing in the stock market. Over time, if the stock market rises in value, the prices of a stock can also rise or fall. Therefore, investing in several different stocks will help investors build their wealth by leveraging growth in multiple sectors, resulting in a profit. Next benefit is liquidity. Stocks are generally known as liquid assets because they can easily be converted to cash that consists of several buyers at any given point in time. However, when compared to other assets, it's more difficult to look for a buyer for some assets, for example, property as in the real estate. Alright, it means that there are several buyers and sellers paying attention to a single stock. Next is the returns are higher over the short term. The biggest and primary advantage of investing in stocks is that it has a potential to generate high returns in a short period of time compared to other investments like bank FDs or post office investments, right? Then comes they're well protected by SEBI. SEBI is Stock Exchange Board of India. SEBI is majorly responsible for regulating the stock exchanges, their developments, and mainly protecting the rights of all the investors. When an investor puts their money in various financial products on the stock market, their interests are also protected by a regulatory framework laid down by SEBI. So all investors are protected by SEBI. The next benefit is flexibility to invest in smaller amounts. An investor is looking to enter the stock market can start with smaller investments. Another major advantage of directly investing in stocks is that investor can buy as per their own choice, and it is not mandatory of investing a specific sum of amount every month. Next benefit is It allows you to take advantage of the growing economy. Alright, as we know that India is a developing country, therefore the chances of companies flourishing in this country are very high. Corporate earnings usually tend to increase as there is growth in the economy. Thus, an investor putting its money in stocks of the businesses influenced by economic growth helps them grow better. Easy process of buying and selling. The process of buying and selling in the stock market is quite simple and easy for all investors. Buying of stocks is done with the help of a broker, financial planner, or online mode. It takes hardly a few minutes to set up an account and start trading. An investor can also buy and sell stocks easily without going anywhere, and this profit is directly credited into the account. For example, there are so many applications available today. For example, Kite by Zerodha, Upstocks. All of these are highly accessible to small investors, to the traders, right? Now we have come to the second section of this unit. The second section consists of the basics of securities market. The share market, also known as the stock market, is a platform where buyers and sellers come together to trade publicly listed shares of companies. The market is regulated by the Securities and Exchange Board of India, which oversees the function of stock exchanges and ensures that listed companies comply with regulations and disclosure requirements. Stock market for beginners. It is a platform where publicly listed companies can issue shares to the public, which can be bought and sold by investors. When you buy a share, you become a part owner of the company on a pro rata basis and can potentially benefit from its growth and profits through capital appreciation and dividends. The second is difference between primary and secondary markets. When a company comes out with an initial public offer, it is called the primary market. The normal purpose of an IPO is to get the stock listed in the share market. So all the stocks that are currently present on the share market or stock exchanges were all initially introduced with the help of an IPO. Once the share gets listed and bought, it starts trading further in the secondary market. Usually, in IPO, stock markets or the stocks are given away in a lesser price and in terms of lots to the investors. All the investors who wants to apply for an IPO have to block their money through ASBA with the lot money, and with the help of which they can apply for the IPO. Next part is pricing of shares. The market determines the prices of the share as per the usual rules of demand and supply. Normally, share prices go up when the company is growing very fast, or it is earning very good profits, or it gets new orders. As demand for the stock picks up, more investors want to buy the stock at higher prices, and that is how the price goes up. Companies require money to take up large projects. They raise this through the issue of bonds, and bondholders are repaid through profits made on the project. Bonds are a kind of financial instrument where several investors lend money to companies. Therefore, all the prices that reflect in the stock market is due to the demand and supply of the particular stock of the company. Hence, the prices increase or decrease due to the demand or supply increase or decrease. Stock indices. From the companies listed in the stock exchanges, a few similar stocks are grouped together to form an index. The classification may be on the basis of company size, industry, market capitalization, or other categories. The Sensex is the oldest index comprising shares of 30 companies and represents roughly 45% of the free float market capitalization. The Nifty or NSE includes 50 companies and accounts for approximately 62% of its free float market capitalization. Therefore, Nifty is the larger or broader index in terms of diversification. Offline trading and online trading. Online trading is all about buying and selling shares on the internet sitting in the comfort of your office or your home. You just need to log into your trading account and you can buy and sell shares. Offline trading is trading by visiting your broker's office or by telephoning your broker. Offline trading is not much real time, whereas online trading is real time because the order is immediately executed as soon as you put in the order, and of course when you have the alternative buyer or seller for the order. Role of a broker in the share market. The broker helps you execute your buy and sell trades. Broker typically help buyers find sellers and sellers find buyers. Most brokers will also advise you on what stocks to buy, what stocks to sell, and how to invest money in share markets for beginners. For that service, the broker is paid brokerage. All the brokers must be registered with SEBI to get their license for brokerage. Once the broker gets the license, only then he can do the operations. Anybody can buy and sell shares in the share market. Any person who is competent to enter into the contract can buy and sell shares in the market. You need to open a trading account with a broker and you can buy and sell shares in the stock market after trading account is open. So remember, having a trading account is very important to buy and sell shares in the share market. And to open the trading account, it's highly important to have a PAN card. Trading account versus Demat account. There is an important difference between the two. Trading account is where you execute your buy and sell trades. The Demat account is where your shares are held in custody. When you buy shares in your trading account, your bank account gets debited and your Demat account gets credited. The reverse is true when you sell shares. Therefore, assume a Demat account as a bank of your shares. Hence, when you buy a share, your Demat account gets credited with that particular share. And when you sell a share in your trading account, then your Demat account gets debited by that particular share. Rolling settlements. Every order that is executed on the share market must be settled.